Courtyard by Marriott presents CNBC-TV18 Disruptors.
They say the stock exchange is the toughest place to make easy money. Since the turn of the millennium, the BSE's benchmark index, the Sensex, has risen sevenfold and many stocks have been multi-baggers. On a daily basis, scores of traders make millions of trades. But the story remains, where some win many and many lose some. Whoever loses, the brokerage house always wins. Today, we capture the story of Zerodha, a firm that has not only disrupted the incumbents, but with its revolutionary pricing has become the largest broker in the country in just 9 years since inception. So while making money on your trades may be difficult, with Zerodha's belief of zero Rodha or obstacles, the execution of those trades has become easier than ever before.
The goal was never to be number one. I mean, our goal even now has been to kind of see how we can expand the capital markets in India, because the markets itself are quite shallow, right? So there is no point being number one in a very shallow market.
In fact, you started out in the capital markets. How was that journey? Primarily because your father was a banking employee, your mother was a teacher. Where in you did you get that capital market kida from?
Yeah, so I mean, I used to live in this area which was full of Marwadis.
I am one. So.
Okay, so I got introduced to markets when I was 17, and then I think it was a lure of quick money, which gets people in, and that was the one that got me in as well. And then it's been a roller coaster. The last few years have generally
just the way the markets have been a roller coaster as well. In fact, I know that you were also a sub broker for Reliance Money between 2006 to 2009. That time the markets were doing fairly well.
Right.
However, when you decided to shut shop and start Zerodha, it was 2009.
Right.
That was the worst period for our markets.
Absolutely. Right.
What made you take that decision?
In hindsight, that was probably the best decision we have taken, of starting in 2010, which was the worst time for the broking as an industry ever, because what happened was when we launched, everyone laughed about it, right? And then they kept laughing for 4 or 5 years because
until you laughed all the way to the bank.
No, not really. I mean, that's never. Money has never been a motivator, right? So I mean, the first. So what happened here? So in 2009 was, I don't know if you remember, May 2009 when election results came.
Of course, 2 upper circuits.
Right.
So you missed out on that trade.
Yeah, and that was a trigger to do something different. So I was in the trade. I was long volatility, and if I squared off my positions just before market close the previous day,
that would have hurt.
Bad, that hurt really bad. But probably that was the best thing to happen, if I look back, because I probably wouldn't have even decided to do something else if that hadn't happened.
There came a class of traders who didn't want to take these full service brokers and who wanted only a discount broking where 20 rupees per lot was the preferred price point. Because brokers, they did not focus enough on research, and their research was best not spoken of. So that way what happened was that younger people started to trade futures, and just the commission rates were fairly high, and in a commoditized business it was supposed to fall. I believe it will fall further. So Zerodha was a beneficiary of a market which was moving from cash investing to a future and options culture. So that is where Zerodha gained.
We were kind of missing out on some of the things we thought a broker should be, for active F&O traders like us.
Okay.
Right, and when you started the business, we were just trying to solve for that problem.
Okay.
And the only reason, to be very honest, all of this could happen was also because NSE started a platform called NSE Now, right? Like an in-house trading platform, which they gave for free of cost for brokers.
Yes.
Right. So
and no brokers took note of that?
I mean, it's kind of quite lame why no one did, because I think that was essentially, when we started the business, I looked at it as an arbitrage opportunity, right?
Yes.
You had technology coming free of cost. I think, these things, it's about right place, right time, so there are a lot of things that, in your life where luck matters as well, so yeah, I think we got lucky in terms of choosing the right time to start this, so.
See, Zerodha, one, getting a first mover's advantage in the discount broking industry, and also in last few years, Zerodha has been able to create an ecosystem which is tech enabled and has been very focused on providing solutions to traders basically, and that is something that has worked in their favor. And because of being an online broker and being the first in the industry to start the entire concept of discount broking, they have got a benefit, and they have been able to capitalize on the benefit that they have got.
What exactly propelled that idea? Was it something which was there in the world already,
Right.
or was it completely original?
No, I mean, it was. Actually, in terms of pricing, right? I mean, that was they originally call it discount broking, right? It's very popular in the US, right? In an online world, the cost of executing a trade doesn't go up with the size of the trade, right?
Right.
What it means is you buy one share with us, or you buy a million shares.
Hang in there. So this is exactly how discount broking works. Break up that revenue in terms of how much of it is from the float, how much of it is from futures, how much of it is from options, how much of it is the annual maintenance charges.
So, I mean, we don't charge, anything for equity investing, right? So we don't, even though we do contribute a lot of turnover on the exchanges, we don't make any money of it. But we do a lot of equity intraday trades as well, So the revenue generation is from futures and options and from equity intraday.
That's right.
In terms of brokerage charges, so 65% is somewhere from there, from that core broking revenue.
No, of options, how much is it from options, purely from options?
Okay. 80% of all trades, 70 to 80% are all option trades. The 20 rupees a trade is actually insignificant in the scheme of things, So, but then, yeah, we do 2.5 million trades a day, right? So at scale, it starts adding up, right? As in revenue starts adding up. So we are working at 40 to 50% margins, So the reason for that is because we don't advertise and all of that. And but we spend a lot of money on just supporting this technology, right?
On more than 50% of the days when you have a budget or something, catastrophic happens, systems go down.
There have been a lot of accidents as well, there have been a lot of trades which have fallen through the cracks and stuff.
Yeah, I mean, I think the flip side of a business like us, for us is, we have to work on an underlying infra, which I don't think in India is that great, right? Because a lot of people, what they don't realize is that our trading platforms only what we have in control, right? There are data center, lease line networks, connectivity to the exchanges, right? These are all things that that are out of our control, right? And
in any case, how are you trying to fix that? Because it's not a TV that one bought online that wouldn't come, or it's not any product that one's bought. It's a trade. If it misses, you lose a lot of money.
I don't sleep for days, when these incidents happen. But then the issue for us is, I think we really started scaling our business in 2016 onwards. 2015 December is when we went zero brokerage on equity investing.
Right.
And that kind of got in a lot of first timers, into the market. I mean, first time account opening holders. Actually, we were at 70,000 clients in 2015 December. We are at 1.2 million today, right? So that growth has just been crazy.
Exponential.
I'm not even talking India, I'm actually talking the world. No retail broker has actually seen 2.5-3 million trades a day being executed by 200,000-300,000 concurrent users. Robinhood probably does 700,000 to 1 million trades a day. E-Trade does around the same. Interactive Brokers, which is the biggest broker in the world in terms of market cap, does around 750,000 to 800,000 trades a day. So we are actually doing 2.5-3 million trades a day, right? So the problem is when you're running at that run rate, small incidents have a cascading effect. Like in India, the connectivity to the exchanges that we have, right, are still on 10 Mbps lines, and things that can handle like 400 to 500 messages a second. In the US, people are at 10 gigs, right? In the sense, when you go there and talk about Mbps, people are like, dude, which generation are you?
Guys are prehistoric.
But these are all challenges. We have to learn to live with it. So over the years, we've done a lot to kind of, from 2016 onwards.
These bottlenecks which come with volume and, with larger number of customers. So there are these teething issues, but both these guys, I know them personally, the Kamats, and they are much more proactive than those, older guys were.
So what are you doing to avert those situations in the
So
future?
we've built backups and backups to more backups.
Currently, what's the kind of, what's the worst or what's the most that your platforms can handle?
See, the thing is, it's not actually number of trades and all. So we have benchmarked that. We are okay there. The issue is what can go wrong, which is not in our control.
Okay.
Which has a cascading effect, So, and those things, unfortunately, I would love to come and say that we can fix all those issues.
Okay.
Right? If someone around BKC is digging something and he goes after a line and, right, we're gonna get affected in some small way. And unfortunate it is, we haven't really had as many issues in the last 6 months, 8 months to what we had, say, before.
Do traditional brokers die?
They are already dead. I mean, if you see IIFL, Motilal, Kotak, Shotak, they have hardly 5% of their business in broking.
Die sounds very negative, right? See, the thing is, what has happened, I think what traditional brokers have done really well is they've diversified. Broking revenue is actually a small portion of their revenue.
That's
so
right.
it doesn't really matter today.
And whatever's remaining, you're eating into that, so.
No, actually no, which is again something that I keep going and trying to tell most of these. So the audience which is set, right, the less than 37 to 38 is not even an audience a traditional broker is catering to today, right? This is a new audience. 70% of all the people that we open accounts for are first-time investors, right? That means if we hadn't really opened accounts, they wouldn't have had an account with somewhere else. We are adding 60 to 70,000 new clients a month, which is quite nice for the ecosystem, because we introduce them to the markets. I'm sure they'll use the traditional guys in some sense somewhere.
The first segment, which is a DIY kind of a thing, will have a more set of customers because obviously the kind of volume and the scale of the size of people that we have. And that's why you will see more and more people coming to the discount broking model, which is more of a DIY and a low cost model. The second model will obviously have its relevance, but over a period of time, it will get into very niche segmenting of customers, niche products which will be offered. And obviously wealth management is something which is scaling up big time anyways. So this three segments of investors will remain, and some may overlap with each other, but more or less will be distinct.
I always felt that advisory shouldn't be part of execution. I don't think they should be combined. It's like a doctor selling medicines, right? So I don't think, I think these two have to be kept separate.
Is there a correlation between your client addition and the movement on the markets
Absolutely.
itself?
It's crazy, I recently plotted the Nifty mid-cap and our client account openings. It's just crazy how correlated it is. The two graphs are exactly, like a mirror image of each other. And which is a problem for the business too, right? As in the fact that we are so dependent how the market does for how many new clients we add to the business.
So how exactly do you then instill into people the tenets of investing / trading?
What we have done in terms of education, our education initiative, Varsity, Trading, Q&A, and Z Connect, together are probably second most active online content on capital markets in the world, right? As in probably just behind Investopedia, right? It's so engaging. There's so many people participating, right? So we're trying to teach people. People who come to the market should probably start as conservative as possible. That's the reason we also introduced a direct mutual fund platform called Coin, right? Where people can come and do mutual fund investing with us.
So how much traction is that gaining right now?
We've done 3,000 crores of investments in the last year or so. So if you were to look at us, I think we are probably the largest online-only mutual fund platform in the country.
Bigger than Paytm as well?
Paytm is just recent,
Okay.
So they probably would need more time to catch up.
Courtyard by Marriott presents CNBC-TV18 Disruptors.